On behalf of the Executive Committee, the sponsors, and the partners of MEPEX, I want to take this opportunity to thank you all for coming over, participating, and flying over from different parts of the world to come over for this event. I would like to stress the fact that this event would not have been possible to take place, especially in the difficult oil and gas time, without the positive spirit that our participants shared with us. I just want to touch base on the idea of the MEPEX. When it started 5 years back, it was like an idea that was discussed with the ex-POPCO CEO at Houston, where we were promoting Bahrain.
Annual MEPEX Forum. I would like to please invite Mr. Mohammed Ghazi Ben Jamia from Tunisia. He will be presenting a keynote speech on clay concepts from the MENA region analog.
And under-discovered zones at all. There is, for example, in northern part of Africa, in the Atlas Mountain, very huge potential. This corresponds to the continuity of the happening in Italy, where all the discoveries are in Italy, actually. Despite this, there is no big work done until now for North Africa in this zone, except the first discovery in North Africa was made there, and it's still producing until now. It's made in 1938, and it's still producing until now, and they drill more than 170 wells on this field. And, this is, I think, very attractive zone. And recently in Morocco, there is already a good discovery made in this zone, in western part, in the eastern part of Morocco, is near the Algerian border, Tendrara area, and I think this is very attractive zone to prospect in the future. Right? We don't have any problem, not like other countries where it's more difficult to address it. In Tunisia, it's very easy to address it quickly and to sell the share of the production straight away at their own risk. I think it's very attractive if we have a good deal. Some of the big companies like ENI, they already have done this for several years in Tunisia, and they continue. And it's one of the biggest producers in Tunisia is ENI, and they continue.
The objectives of this presentation is to discuss. Maybe I Okay, so we're going to discuss the issue of data showcasing and data security, and contrast, if you like, and discuss the rivalry between using data and keeping it secure. It's only a short introduction. It's obviously a big subject, and our company specializes in. What I want to do is to provoke people's thought about the subject, perhaps think about it in a way that you haven't before, and thereby be able to ask questions, discuss it with us. I have two colleagues of mine who are also with us here today. We can answer questions later. We'll have a short question and answer session at the end of our hour, and there's also a question and answer hour at the end of the day. So, and we'll be, of course, around during the day. So, some thought provocation, some awareness enhancement is the objective. Oops. Press the button. Just press the button. So, if you're interested in using your subsurface data, and then it's totally unusable, So we need to understand security, and we need to open some of the doors, some of the windows, so that the data is used, can be used without compromising security. So apart from people, who of course deal with data, the next biggest threat to data is the humble computer network connector. I'm sure you've all seen one of these, plug it into your computer, or indeed use the wireless base station. This is the route by which data security can be compromised in a way that is not visible, not seen. And I'm sure we all worry about it at some point. So a little bit of understanding of what happens and what's available is important to everybody, even if you're not an expert on it.
And I can be contributed to your work with British Gas and Shell, and recently has joined Petrometal. We have a very interesting set of blocks in Mongolia. One of the last, shall we say, low cost.
So we've got some Himalayan thrusts that are actually just coming up and bringing some of the geology to the surface. And we're exposing a lacustrine source rock. It's world class, it's extremely thick, very high TOCs, HIs, and the analysis of this shows that it's capable of generating 50 million barrels per square kilometre from an interval of 50 metres. We actually have 500 metres here. So just think about how much oil could be generated if this was down and mature and generating in our basins. So I'll just move on. So just to let you know that we are an AIM-listed company. We are giving out information here. It could potentially affect our share price. So we do ask that people take what we show, but also be aware that we are looking to make sure that we are representing the company fairly. So just some highlights about Mongolia. Order that we'll take the talk. There's an introduction. I'll just discuss the regional geological settings, how it is a proven oil province. We've got our exploration database and the petroleum geology of our particular acreage in comparison to the neighbouring countries. China, late Jurassic to early Cretaceous lacustrine system, and this is our primary petroleum system that is present within our acreage. We also have the secondary petroleum system, which is found in the Permian and Triassic, which you can see in the Tarim, the Yungar, and the Ordos Basin. But the Cretaceous system actually goes right the way through here and is particularly prevalent in the eastern part of Mongolia and China, where the volumes of oils, for example, in the Songdao Basin, are over 30 billion barrels in one field. Collectively, there is it is a continental climate. It's cold it's dry because it's in the rain shadow of the Himalayas. So it's cold and dry in the winter, and it's warm and dry in the summer. It gets to about 30 degrees in the summer, minus 30, minus 40 in the winter. I found it absolutely fantastic, so I'm living out there now. In the middle of winter, yes, it's cold, but as long as you wrap up warm and you've got the right weather, it's fine. I'm looking forward to the summer, by the way.
And yes, and the nearby Siberian oil industry shows that they're well equipped with this kind of environment. Is there anyone else who'd like to ask a question?
Couple of questions about this company. First one, what's MEPEX stand for the company? And
Is the field getting older as we move towards the northwest? So Westphalian, getting down into the Lemurian Pegasus. Radar producers from the early Lemurian Stone Formation, and we're seeing targets appearing in the Donatian Feld Sandstone. Although there's not many wells being drilled on the exploration side, what we are seeing is a very high success rate in Carboniferous, greater than 50% success rate. One of the things that's unlocked this deep Carboniferous trend is widespread access to
long offset 3D seismic and broadband reprocessing of older seismic. It allows you to see below the base per minimum conformity. Previously, it was very hard to map these different calculations. We're also seeing improved definition technology, so widespread use of horizontal drilling, hydraulic fracturing, which means people are using lower quality reservoirs than previously. So one of these structures, this is the Keynes structure, it's 100% cloth. It's a large three-way composite structure. It has a closure area of approximately 50 square k's and it has more than 500 meters of vertical. It has about 1,000 meters of stacked reservoir potential from Millstone Brook through the center of the Ordale and Scranton Coal, and a very large reservoir in the Fell Sandstone formation. All these formations are proven producers both in the Southern Sea and onshore in the UK. And this sort of structure can be tested for around 15 to 20 million US dollars in the current environment. So in terms of scale, we've broken it out into different formations just because they have different properties, different risks. But effectively, this is a TCF scale structure, so 170 million barrels of oil equivalent, recoverable. Relatively low chance of success when you look at riskiness through the standard risking, like through PRMS. But when you actually look at the exploration success, a number of the Cardiff prospects all ranked about 20%. So when you compare that to actual drilling success rate of more like 50%, we are looking at the risking and saying it's not working for Cardiff. But the drilling evidence shows that these risks are overestimated. So one of the other things we have in a very mature basin is plays become unfashionable. And this is very much a technology-driven issue. Bunter sandstone,
Introduce a new speaker to the session because actually we have a contribution from Bahrain with the topic that the speaker is adding. I would like to introduce Dr. Nazar al-Baharna. He's ex-Minister for State for Foreign Affairs, ex-Minister of Health. He's an entrepreneur and a businessman and an expert on Bahrain investment market. He would touch base on the market in Bahrain and the new regulations that recently are introduced to encourage our MEPEX partners to also seek investment through the Bahrain market. Dr. Nazar, please welcome to
the Bahrain bonds. So you don't have to go actually, it's not regulated by the CBP, the Central Bank of Bahrain. So the requirement is very simple. A company established a closed company in Bahrain, and that closed company minimum capital is $250,000 BD, which is about $700,000, something like that, something. And that company can actually raise money for their operation. And delisted quickly, start right away into the stock market. This will allow the company to grow, it will allow it to attract investment. At the same time, it will allow the company to achieve its objective without actually going through the tedious regular way of raising money to banks and other things. The second thing, important thing, is that it has to be associated with what we call a sponsor. And that sponsor is a company or individual or a company that has the ability to help in making sure that the company established meeting the requirements and regulation of operators. So the sponsor role is actually to raise the money, is to regulate it, to make sure that everything is in order, and at the same time to coordinate with Bahrain ports. It's very simple. It's the first kind. I think there is nothing like this in any country in the world. So Bahrain is the first country to establish such a thing. And of course, I know that we're talking about some companies they want to go to IPO, some companies want to go to outside IPO now. You just have to start just a sort of close company in Bahrain, and then this company can come from anywhere. It doesn't have to be from Bahrain. Any company could come from UK, from Saudi Arabia, from Mongolia, from anywhere, and they establish a close company in Bahrain. And from there on, they can raise money. Also, the amount of, let's say, the fees will be also regulated. It will be like 5 to 7%. So unlike, for example, if a bank raises the capital for $1 par value, we will add about 40%, so it will be sort of 1.4. Here we're talking about 5% of the dollar, so 5 to 7%.
And I would like to thank MEPEX to give us this great opportunity to be here and give a brief about our activities, about our company, about our group. We are actually the European International Group. We are in Sweden, our headquarters in Switzerland. And actually we are working in different fields. One of the main fields is the oil and gas sector. We are working in the Middle East, in the other region, under the umbrella of MEPEX. They are our platform in all the projects. And even we are supporting the fund from many subsidiaries. One of the main subsidiaries, it is the Rothschild Group. We are working closely with them and providing fund for many projects with very comfortable funding model. Actually, I'm very sorry for today because I didn't prepare any presentation due to the limited time. But I just want to preview about our company. And I would like to introduce Mr. Dmitry Zakharov. He is one of our partners. They have very unique technology which is invented by their company for their catalytic protection and pipelines. And maybe we can continue with the other if there is any questions. So I am totally pleased.
First of all, I want to thank for invitation for this conference, His Excellency Sheikh Ali, Mr. Habib, and our partner, Mr. Habib. My name is Zakhar Dmitry. I'm a general manager of Russian company Pipeline Systems and Technologies. Before my presentations, I want to show you a short film about our company. For manufacturing corrosion protection equipment, development of new kinds of products and technologies, engineering, design, and services. We have a modern factory in Moscow region. Our main products are insulating monolithic joints, corrosion monitoring systems, corrosion protection stations, educated ground protection devices, and others. We manufacture welding monolithic joints for all diameters from say half of inch till 56 inch, and the maximum pressure up to 400 bars. We use special U-shaped sealing gasket system that allows to use these joints for high pressure and in conditions with high mechanical loads. We make on our factory all mechanical tests such as bending, torsion, electrical tests, hydraulic and pneumatic tests. The operation temperature for joints minus 60 degrees up to plus 150 degrees. Our joints are used on all famous projects in Russia, such as Nord Stream, South Stream, ports of Siberia, and many others in all climatic zones and in all diameters, in oil and gas companies. Another our type of products is corrosion monitoring systems. We have several types of these systems, and we develop these systems by ourselves and manufacture on our factory.
And it's really a pleasure to see all of you here. Today we have an interesting session, and along this panel I have with me Mr. Ghazi from Tango. And he will probably give a more elaborated introduction of who he is and what he does for his company. We have Patrick, and he will also do the same. Unfortunately, I didn't have really enough time to spend with the gentleman here to give you a good introduction of himself. And of course, our good friend Mohammed Al-Dani from Okum. To that extent, I will start with Mr. Mohammed Ghazi on my right, and give the chance to the other two gentlemen. Then I'll give you a bit of a briefing about Crescent Petroleum and its activities. Then we can open the floor for questions.
Just briefly, first, my name is Mohammed Ghazi, the engineer.
First mistake.
No, it's not your mistake.
It's not going.
Just briefly, I have a PhD in structural geology. I had my thesis in France in 2011. Very old. My PhD is in 1986. Young, not so young. After I start in exploration, my thesis is mainly in structural geology, but it's very specialized in microtectonism. It's mainly for fracturation and modeling of fracturation. It's very unique technique to generate the stress regime and to analyze the structural modeling for the full area. It's very helpful for essentially for the oil activities. Is very important, and I can explain to you during my presentation the use of this technique in all that field.
Second wind. I really appreciate the opportunity. Look, we're gonna go through this, and I apologize if we say one thing great. Conversations about money, yours, mine, our money, how we get this to be beyond a reasonable rate of return. Everyone knows what happened in the market. Everybody knows that there's a significant flush out of small companies, mid-sized companies, and even the larger companies need to offset some of their non-core, offload some of their non-core assets. We started about a year and a half, 2 years ago, when oil, WTI was about 50. And by the time things settled out, started getting the first opportunities lined up, WTI was $28. Fantastic opportunity. Had our team already been sitting on the cash to move, but we weren't. So we began the conversations well before your end with Patrick and his great team, and we've been constantly working that region, South America, tied to both personal and engineers. Our team is drilling and production focused. So we go through this. We're not a one-trick pony with the company, but our focus is in production and using that cash flow later to move into the exploration. But doing low-risk exploration within the site, within the blocks that we acquired. That strategy will hold true not just as Patrick mentioned in South America, but around
in upstream M&A, and particularly in the gas, and that's tended to lead countries to use a different contractual model. So in Iran, for example, they have the buyback model, and the new Iranian petroleum contract is likely to be another form of risk services model. Federal Iraq has taken a different approach to Kurdistan, and in Kuwait you have enhanced technical services agreements. Abu Dhabi has a slightly different approach. They have a tax and royalty scheme, and that's recently been revised for the onshore concession that was rebid in 2015 and recently concluded. So what I'm planning to do here is just drill down into the fiscal terms of a typical production sharing agreement and a technical services agreement in Iraq, just to explain how, from a contractual perspective, the pain of low oil prices allocated between the states and the relevant oil companies, and what sort of tensions that's led towards. So just as a refresher, technical services agreements that have been used in Iraq are likely to be very similar to those that are employed by Iran when it opens up its industry to private sector participation. There have been 4 bid rounds in Iraq to date. The first round of licensing related to brownfield operations. These were projects, huge existing fields where Iraq thought that bringing in IOC technology and capital could increase production quickly, and the contractors had to agree to carry out a defined scope of work or a minimum expenditure commitment, and their money was at risk until they met a baseline production target. Thereafter, they're able to recover their costs, and they would receive a service fee, which was a remuneration fee, which was fixed, a fixed amount per barrel of incremental production.
A lot of focus on debt finance and debt funding, but there's obviously an opportunity to tap into the equity that Islamic investors have. So I think what we will do is just give a quick overview of what is Islamic finance, touch upon some of the prohibitions. I won't go into too much detail on the structures, and maybe just talk more about the Sharia approval process, in particular the Sharia supervisory board's role, and maybe, again, if time permits, we can touch upon the governing and jurisdiction issues when we're dealing with Islamic finance contracts. But as I said, I think I'm trying to avoid an overly technical presentation here. And I may throw a few questions out to the audience as well. And I guess the first one I have is, Bahrain is obviously well-trodden, established Islamic finance player in the market and in the region. So it would just be good to gauge what the audience's understanding of Islamic finance is, if any. So are the audience familiar with Islamic finance principles, techniques, or is it something a bit new? I'll take it maybe a bit new, okay. Okay, so what is Islamic finance? I guess if you were to ask 10 people what Islamic finance is, they may give you 10 different answers. Sharia means different things to different people, but in essence, when we're talking about financing in Islamic finance, we're talking about conducting financial transactions in accordance with the principles of Sharia. What is Sharia, you may ask? Again, some divergences of what constitutes the sources of Sharia, but in essence, it's the Quran, the holy book of the Muslims, the Sunnah, the traditions of the Prophet Muhammad, may peace be upon him, Qiyas, which is, if you like, analogy, and consensus amongst the scholars. So there's 4 sources of law, if you like, in Sharia, which makes up Sharia and Sharia principles. But as I said, it's not uniform, and there will be divergences depending on which country you're from or which region you're from. The Sharia, as I mentioned, it covers every aspect of one's Muslim's life, whether that's how you pray,
how you eat, how you deal with your relations, your neighbors, and as I mentioned, in addition, it's how you conduct financial transactions as well.
Yeah. Do you see the lower prices as a signal to bargain?
It's, I mean, guessing one price is extremely difficult. I just saw a presentation that right before us, which estimated the price at 50, 55, 60, 65, 70. And we all know that it could be, it would just turn out to be totally wrong. I would just like to give an example. One of the companies I bought way back in April 2016, the day we were finalizing the documentation, the oil price was, I think, 31 or 32, and there were press reports that we will see less than 20. So you can imagine the kind of stress we were going through. So when we are at about 50, 60, people they always project through a narrow range. If it's 50, 60, people will say, well, it will be 5 years later, 40 to 70. If we are at 150, they will say 120 to 200. So nobody at 150 will say it will drop down to 10. And nobody at 40 will say it will go up to 140. Having said this, what we see is that there is always a mean reverting. There is always a Brent price of oil. We take that in perspective when we are making an investment. So we did not scare away to make an investment at 32. Right now, we think the prices are at a far more reasonable level than they were 2-3 years back. And we all know, anyone operating in this region knows that there's always a scarcity of quality assets in this region at the right price. And second important issue probably is the limited information, limited financial information available for the company. So if you would like to do some kind of a research to find out the targets, it's extremely difficult. Second is people have some the sellers, so to speak. They have some very unrealistic estimates when they're selling. And a lot of sales are in the auction phase, which we don't like. So what we have seen, to answer you, a lot of companies to whom we said no in 2014 and part of 2015, at least I would say 5 have come back to us now at a fraction of price to which we were willing to buy in 2014. I was sharing an example with Richard. We bought a company which is about at 20% of what we were willing to pay 3 years back. 80% down. So we think it's a good opportunity to go out if you have patience and long term. I would say if you want to basically flip it, I don't know. But if you have a 4 or 5 years perspective, it's a very good time to buy. Yes, sir.
With respect to that, what are y'all seeing as far as P1 and P2? What are typical payments? Are you looking at $10 for acquisition costs? For acquisition costs, based on P1 and P2, what are you seeing in this region?
If you permit me, we are not in upstream. Okay. Because I'll give you the background that when EPICOP was formed, and it's still prevalent today that the national oil companies are dominant in the areas where we operate. So obviously we will not, and we can't compete with them. So we usually in midstream, downstream, logistics, petrochemicals, which is for downstream, and energy-intensive industries.